Hey there, everybody. Welcome back to another 21st Century Renaissance, another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. I am still broadcasting from on the road, but luckily this time I don't think I look quite like I am in a prison cell. I may look like I'm coming at you from Jurassic Park or wherever it is that John McAfee ended up hiding out after he was allegedly, disappeared and such. But in any case, we are going to continue to do the things that we always do here today, and think about what's going on today with GameStop, what we're looking at heading into this week, thinking about how we can forecast some of our price movements. By and large, too long did not read or want to watch the video. It is looking like some more of the same in terms of the types of conditions that we're looking at with GameStop being affected, especially by the broader context in the overall market. However, there have been some very interesting changes in the options landscape that I want to take some time to point out today, and then talk about how that looks to affect our trading and potential price action heading into today's session in a few short minutes. So we'll go ahead and take a look at that. Let's see. Make this nice and big so y'all can see. So first off, want to give a big shout out right after many days of support from our friend Goat Zuback, Borodino Boy. Borodino. Very good. Very good. That's a wonderful poem and song by Lermontov, The Battle of Borodino. Right. I had this post actually a while back that I want to say, forget when this was, but it was like, I did a whole thing about Battle of Borodino and how it like connected to something or other. I forget. I got to go read this post again. But Borodino Boy coming in with the coffee there. Right. That was the case of, it was the 1812 overture. That was it. Right. Everybody over on Superstonk was going all crazy because of the 1812 overture and like layers of symbolism and how we can get carried away in layers of symbolism, etc. But something like that. But Borodino Boy with the coffee on today. Thank you so much. It was delicious. It was a Thai honey lime iced coffee. That's what I went with today. So thank you very much. Thank you very much, as always, to Scruffy, Dad Scruffdo. Thank you so much for your support, and thank you so much to everybody who has supported and will support. Has support coming up down the line. Who will be due for a thank you. You guys help me keep this free and open access to everybody and unmonetized. So thank you so much. Really appreciate your support. And of course, a big shout out to number one homie, my mom, whose birthday is today. I know she watches this and reads these posts. So happy birthday, Mom. We may have already spoken by the time I release the video. So happy birthday. So what are we looking at in terms of context today? We yesterday, pretty predictable trading day with respect to GameStop and how that worked out in the open market. We kind of hung out there right in these lower price ranges, just above, right? We're above the gamma flip line, hanging out there in call gamma, dominant territory. So that would be trader long gamma, dealer short gamma, which has the effect of suppressing volatility, right? So dealer short gamma puts negative gamma on dealers' books, which means they hedge that by buying shares. So as large call positions are approached, as trader net long call positions are approached, dealers sell shares. Either right as they're approached from below, dealers will sell shares, and as they're approached from above, they will buy shares in order to gamma hedge that position. So while we are in call gamma bracketed territories, so territories defined by net trader long calls, we will see lower volatility conditions marked by lesser price swings, not a lot of chop. We got a little chop, but really not too much. Smaller intraday price movements, and in general, kind of a slightly grindy upward move toward wherever our call wall is. So we stayed pretty close to where that gamma flip line is, right? So on our chart here, I have that marked by a green line. So while we're trading over that line, we are in call gamma dominant territory. That's trader long gamma. That's dealer short gamma. That's especially true. We can keep that assumption with especially when we're looking at the broader market. It's a little bit more difficult when we're looking at individual equities. But with the broader market, that assumption is broadly true, based on the way that retail traders at large tend to trade options. So, 2023, 75% of all SPY volume in the options market was 0 DTE single leg options. 75% of all retail trade activity was that. So, we can. That's not a perfectly accurate assumption, but it is a workable one, especially with respect to taking a look at SPY. So we stayed above that for most of the day, and we had pretty stable conditions. Traded down right into the after hours and pre-market period. It does look like, based on where we are just before open, we're kind of heading back to that 600 territory, so back up over that line into some more stable conditions. Still not sure, right? That's still on the flip line. It could really go either way, but basically what we saw at that point with GameStop is, just sideways, right? Consolidatory conditions. It was a little bit more predictable. I think day traders had a better time of this. We got a nice 1, 2, 3 off that VWAP 2 standard deviations above average line. So established that mark early, came back for a second touch around midday, and then this looks like it's about around 1:30. Came up for that third touch, and then this bigger dip off of that was day traders then going ahead, taking some bigger positions here, especially short trades. Well, I should say bearish trades off of this line, and then letting that continue all the way to the bottom of the channel. Went through VWAP, went through our moving averages down to the VWAP support line that is 2 standard deviations below the volume weighted average price. We bounced back up for a light recovery and then hung out there before everybody did what they do in the post-market period, where we kind of just ignore certain levels, I guess. But we moved down, let's see, we stopped kind of caring about our intraday technicals and then moved down to that historic support level at 2570 and to the about where the 100-day moving average is. So that's what we looked like in GameStop. As far as trying to forecast what we're going to look like in terms of the broader market, what I would say is that while we do have this significant chance of trading down all the way back to our put wall again, we still have our put wall at 590. We have a couple marks where we have volatility ramp up. So we've got some volatility, a little bit that ramps up at around 600, that can get us down into this neutral bracket. What's kind of intraday keeping us back up and closer to this 600 level is the fact that we have these not super volatile kind of neutral positions, not slightly negative, some net put GEX, not a ton of it, basically above 597. At 597, it starts to ramp up. We kind of ramp up into 595, which is a very volatile position, kind of a put wall strike in and of itself, based on how much negative gamma we have there. Actually, at our current price level, it is larger than 590, but if we move down to it, then 590 kind of stands out as a pretty big negative gamma position. Part of the reason why the gamma exposure there is so low is we're so far away from it in terms of what our price is right now. But yeah, as we move through that, we still have some negative gamma that's built up, some put gamma around 595, 594, 593. The 592 should ramp up, 592, 591. But when that 590 gamma gets realized, there should be this kind of put wall bounce effect, which usually, basically every time we've done that over the past 2 weeks, traders have really quickly picked that up. And we also haven't seen that type of move materialize intraday. We've seen each times that we've gone down and tested that put wall, it's been when it's not possible to trade options, It's been in the overnight exto and really early pre-market hours. So we do still have that structure there that traders or institutions could take advantage if there's some event that they decide they want to pass off this on, or they just decide they can do it for whatever's really driving things, Supposedly then yesterday we recovered because Trump then rolled back the tariff stuff, so the market recovered. Maybe. What do I know? But I mean, I see this stuff correspond too frequently to the option structure and to our technicals to think that, all right, this isn't some kind of calculated move, at least in some part, from a number of important players to sort of go, yes, this really was super unexpected, or completely something that was unexpected given just how measured this stuff is. But again, what do I know, right? I'm not going to speculate endlessly on what really are the catalysts for this. What I will say is that, I mean, if we zoom out on SPY, right, we have about as bullish a structure as you could want. That doesn't mean it will stay that way, but basically we've been riding the 20-week moving average for all of 24 for basically the past 14 months, 15 months. We dipped a little bit below it back. This was mid-January. So that kind of downturn condition we have where we moved into the 580s, maybe kind of touched upper 570s territory. This was back when we got the first really big kind of short wave on GameStop on January 14th. That dipped a little bit below. We had just kind of barely a little bit earlier to that started to flirt with overbought territory on the weekly RSI. But we've evened out a little bit. We're down to 59. That's not crazy. That's not crazy levels of RSI. So, definitely an upper move, a continued sort of move upward is possible. But, not to discount that potential downside volatility that's baked into our options levels there. Okay. So, yeah, looking at options in general, like total volume doesn't really stand out to us. We did have, and I posted about this, I just kind of made a one-off post over on my X account about this today. Some other people have been commenting about this as well. Dark volume percentage, not crazy about, 10%. What was really interesting is basically a very high volume of a high number of our biggest trades on the day, and all of our large ask trades were, that is, bullish trades, were routed off exchange yesterday. Is this a crazy amount of volume, pushing 300,000 shares? No, that's not crazy. But if you look right yesterday, we came back down to about 3.3 million shares total on the day. That can really affect the price. And it's right. The stock gets controlled not often with these kind of massive movements that are very conspicuous. It gets controlled more often through these kind of nuanced decisions, right? Rerouting, right? Not even 10%, rerouting, 5% of the volume, but having it sort of skewed towards ask volume that's rerouted, gives a little bit of flexibility to nudge the stock in a certain way, or prevent certain anomalies from kind of taking the stock out of the bounds of certain parameters that then have this kind of options feedback loop. And then the thing with GameStop, right, is once traders get excited about a potential recovery, you can get a call dog pile, which can really make the stock kind of run out of control. And, market makers don't necessarily like that, because they like the stock to stay within predictable parameters so they can, maximize their profits on short option sales, things like this, especially at these levels of a volatility cycle. So, not to push too much conspiracy with what goes on with dark pools, but right, we've seen many times these kind of conspicuous reroutings of ask orders, right, not necessarily affect the price in profound ways, but they do affect the price, that can compound down the road to have profound effects. If we look at shorting, right, we did not see too much shorting yesterday. Shares remained pretty constantly available to borrow at around 2 million, except for this blip where we went down to 0 for a single minute. We did see, it does look like pre-market we have some borrowing. So we're down to about 1.6, 1.7 million shares available to borrow now. That may end up being used, not all the time, but I often see these kind of, when shares are borrowed pretty close to market open, many times that can indicate that someone has an intention to use those shares once market open, right? So they'll borrow in the pre-market period, not use it in the pre-market period, but then use them tactically in order to keep a lid on the price, again, as something like preventing something like a call dog pile from happening, that kind of takes the price to a level that perhaps institutions are not necessarily prepared to be able to trade something like that. Technicals, we've been, I think I pointed out here too, we've been kind of hanging out, right? If we just look at kind of technical levels, it looks like, again, right, it looks like we've established some support where we are based on this historic level. This was Where we tap down, right, this was a reference level that was established based on the position of the 54-hour moving average way back in the middle of November, shortly after November OPEX, as a support point before we made our first run up to 30 and then above 30. It was referenced again around Q3 earnings report after hours. It was the low point that we dipped to then as a historic reference level. So we dipped all the way to 2570 and then went all the way up to 31 and then came back. And the last time we visited this price level, we went through it and then quickly got bought right back up to it by market open on Monday, on Monday's dip. And then we've basically been trading, we've been trading entirely above this level since then, with the exception of a single cent. So we did dip down to 25.69. So certainly from a technical perspective, that's good to see. We did have some pretty good support earlier, right? So that's not to say that this has to be respected or that there is a mechanical rationale for why this will be causally supportive. It seems to be something that more has to do with traders using this as a navigational mark and seeing this as a place to perhaps enter trades, as a good place to bet on stock price recovery. As far as our options changes, some interesting things affecting the landscape in some profound ways. So the first one is here at $26. This was a very large short put position. So this was a trader short put position that was opened on during Monday's trading that looks to have caused us yesterday to have run into resistance a little bit sooner versus that 2650 position. So we did have those 2650s short puts entered into. Those are still on the board, right? Those are not for this week. Those are for next week. Those are for the 14th. But the 26 trader short puts are out. So that trader took all of those off the board, which means that now that position is not nearly as upwardly resistant as it was. That does give us a little bit more leeway to move into the 2650 area. That gives us a little bit more run. With that being said, let's see. The 27s were, no, it's the 28s were mixed, but the 27s were a conspicuously long order. So we had about 1,500 new contracts come on the board for the for $27 for this Friday. So that's a 3 DTE trade. I guess yesterday it would have been a 4 DTE trade. Very interesting. That's a pretty bullish bet. And if we look at next week's OI changes, right? So we can see there's our 2650s that are short, trader short. They're still on the board. 31, right? Some of these bigger strikes mixed. I think the 28s here, interestingly, the 28s here were mostly short, trader short. These were mixed, but the 31s were a big block, 1,100 almost of long calls at 31 for next week. So these are some interesting bets. These take non-casual amounts of capital. I mean, an institution would probably not bat an eye at, say, like, a $40,000 or $25,000 bet. But, maybe these are coincidental, WSB YOLOs or something like that. But perhaps not. Perhaps these are traders that are in the know or suspect that there is potential for something like a big up move that could happen in a very short term. I mean, something's got to happen for those 27s to be profitable. The stock's got to do something like basically now, basically today, or those are not necessarily going to print. However, IV conditions are extremely low right now. A small move, right? If we run 227, basically from where we are now, I mean, that'll be a great trade. Those will be up. That'll be a 200 or a 250% trade. So if we just kind of hang out where we are, maybe not so much. So risk involved there. The 31s, they have a little bit more time, but basically kind of this week those have to move, or those are gonna be tough. Again, IV is in this trader's favor, given our current conditions. Max Payne still at 2650. Move down to 2650 for next week. See if those can move up based on how traders position themselves going into next week. February 21 still sitting pretty at 26. What we're looking at in terms of gamma exposure, Yeah. So if we look at our gamma data, again using our assumptions, where it's not typically clear, 2550. It does look. What I've been seeing is mostly long puts at 2550. So as far as that net GEX position there is concerned, it is trader negative, dealer positive. So if we sell into that position, I expect that dealers will be selling shares into that dip, right? So we're gonna see downside volatility increase as we move towards 2550. If we move towards 2550, that would take us right down to 25. We do have a big. It's hard to say what's going on here at 25. It shakes out under default assumptions to a neutral position. We don't have really much of anything below that. I have to imagine that there would be some kind of pause at 25 if we would run down and then realize that trader long negative GEX at 2550. We could, right, like we said, if we do have some reason, if we do see a market downturn, we could see something like that materialize. So I definitely don't want to downplay that. For now, right, we still do have that downside potential, and it is built into our options landscape. However, with that being said, right, we know 2650, even though this is coming up as a negative GEX value, we know those are trader short calls, or excuse me, trader short puts. So that's a volatility resistant pattern. 26 is now neutralized. So I think under normal conditions, market trades up, steadily trades up. We're looking at something like consolidation, again, around here, maybe moving up a little bit over 2650, running into this pretty big gamma position at $27, and then kind of trading back down towards the end of the week at 2650. I think that's our highest probability scenario. But with that being said, I have noticed at some of these strikes, I mean, it's possible that those $27 calls that came in at 27, right? So those are going to act as a bit of a lid. They're going to add some resistance. But with 28, for example, and with some earlier trades on $27, traders look like they've been rather aggressive with selling market makers short calls. So this tells me that, okay, there is perhaps some potential that dealers, if they've just kind of been stacking up long calls in these low IV conditions, that traders have been selling them pretty aggressively. Like, if our price is around 2650, short calls at 27 when we were just a few days ago trading up above that level in a pretty supported way. Like, I understand, right, where max pain is, but if dealers might just decide, hey, you know what, we just won't hedge that position. Actually, we're just gonna let the price go up, and then those will go in the money, and we can volatility squeeze some of the short retail traders there, and then we can draw in more retail action maybe at some later strikes, either for next week or into February OPEX. Once we get IV to go up, we can spike premiums again, then let IV go back down, and then make all the money we were going to make on that February OPEX anyway. But draw in some attention, right? Even these little spikes in GameStop returns attention, gets retail traders excited. Maybe they think, oh, this is going to be some kind of a bigger recovery. They come, they bet on these options more, especially they love to buy long options. Long calls are what everybody loves to buy on GameStop, even though it very often is not a bet that pays off. And then market makers then can benefit because prefer to have short calls. They hedge their long calls so they don't lose on those, but they want to collect premium on short calls. That's the moneymaker there. So in order for them to do that, like, there needs to be attention on GameStop for people to come in and buy in serious numbers. And I don't think our total OI right now, is pretty suppressed, I think. It's decent sized. We have about 130,000. That's pretty typical, actually. But they might be able to draw in a bit more for February if they do something like that, February OPEX. So anyway, not necessarily saying that is something that we see materialize today. That could be something that happened. It would be weird for something like that to occur on a Wednesday. We don't typically see something like that. Like I said, I think highest probability is we just kind of hang out around here and do nothing. I think if we do see some kind of short-term recovery, some sort of interim recovery, as we move between these two volatility cycles, between the one that started in early January, I wouldn't expect to see action on that, some kind of FTD recovery or covering type stuff, probably until toward the end of next week and probably into OPEX week is when I'll be looking to see if there are any signs of something like that. This still feels a bit early to me in terms of covering ETF FTDs. Yeah, with that being said, right, I think any kind of big recovery back up to maybe where we were trading in early January or late December is going to have to wait until March. And I don't think we see that kind of restored elevated IV conditions again until the 2-week lead up to earnings. But that being said, it's important to keep the potential for this scenario on the radar to just sort of, for my own trying to understand what happens, trying to predict how institutions are going to try to play these dynamics, how they're going to try to exploit the types of structures that get put in place by the options market in general in their favor, especially because they can use, strategic inflows of volume, things like this, the creation of synthetic liquidity to manipulate the prices of these stocks, to try to predict, right, when these kind of outlier events can happen and what are the sort of conditions that these institutions themselves will try to take advantage of in order to bring about these otherwise, unpredictable types of price action in GameStop. So some potential for that. Again, I don't think it's a super high likelihood that something like that happens, but if something does happen like that, I think there's a good chance that the reason why it happens under the conditions that it does have to do with market maker options strategies and attempting to draw in more buyers ahead of February OPEX, something like that. So so that's it for today. Let's see what the market does. Let's see what the broader market does. Let's see how that affects how we look in GameStop, and let's see what the future has in store. So thanks very much, everybody. We'll see you bright and early tomorrow. So take care.